Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 31st of October. It's been another interesting week with all sorts of data adding to the volatility that we've been seeing for so many months now. On the one hand, of course, we've seen some softening economic data in the States, which has led to some hopes that perhaps we may be getting towards the peak aggression in terms of the interest rate hiking cycle. Indeed, in terms of corporate earnings, we've had some fairly disappointing outlook comments and results from a number of the big tech behemoths, such as Alphabet, owner of Google, Microsoft, and indeed Amazon. So the Nasdaq index has been under pressure again. So it remains to be seen what's going to happen with interest rates in its attempt to curb inflation. 0.75% rate hike still bolted on for November. Let's see what happens in December. So in the year to date, the Dow Jones is currently down 12%, S&P 500 down 20%, Nasdaq down 31%, and the FTSE 100 is down 5%. Some interesting companies going to be reporting next week. First of all, we're going to get third quarter numbers from BP. Shares are up 43% so far this year, perhaps not surprising on the back of a 23% rise in the oil price itself. And as we also saw from this week's bumper numbers from Shell, there could be further increases to the dividend payout, yield currently 4.3%, or indeed further buybacks. For BP, this is despite its Russian exit. It sold its 20% stake in Rosneft earlier in the year and put aside a charge of $24 billion in the first quarter. Clearly, it's got some ground to make up to cover that. That being said, we also look out for strategic updates, both in terms of its further divestment, sales of non-core assets, and also its move towards renewables. Also got third quarter numbers from Next. This has had rather less of a pleasant time. Year to date, shares are down 39%. Retailers in general, of course, have been badly hit by the cost of living crisis, rising interest rates, and indeed inflation. Unfortunately, Next has been no exception, despite the fact that it's regarded as a well-run company. At its half-year numbers a couple of months ago, there was a rare and unwelcome profits downgrade. That being said, full price sales at that update were up 12%, pre-tax profits up 16%. So it will be important to see what sort of outlook Next will come out with when it reports those third quarter numbers. Finally, Sainsbury's got some half-year numbers. Again, a share price under the cosh, down 30% in the year to date. Needless to say, competition remains fierce in the sector, particularly from the discounters such as Aldi and Lidl. There's also those cost and inflationary cost pressures, as well as supply chain blockages which are going on. And if you look at their last update in Q1, this was a company under pressure. Sales at Argos were down 10.5%. In its clothing division, also down 10%, and in its general merchandising division, down almost 15%. So Sainsbury has got some way to go in reassuring investors, although one bright spot is a dividend yield at the moment of around 6.8%. Thank you for watching. Have a great week.